What's good? We are back. Hope everybody's doing well. Today is July 17th, 2023. It's been a couple weeks since the last time I streamed, so had to make some time. And we've had a lot of good developments over the past, I would say, 3 weeks. So we'll talk about those things, but I really wanted to kind of take some time with y'all today to share some things that I've done to help me assess undervaluation and overvaluations, in particular to when I like to DCA capital into a market. So this is not financial advice, but this is something to say, hey, maybe I could learn something. Maybe this is something that I've struggled with in the past. I want to be able to be a little bit more tactful, a little bit more precise with my capital, because I remember when I was first investing in the markets, it's kind of like, you know what, you put a little money in and it seems like, dang, I'm buying this local top over like this past couple weeks or month. And my thing is, I really wanted to learn how to stay away from buying local tops. And so there's a method, right? When there's a method, you'll find it in the madness, right? I don't know if you've ever heard that term before. And so, what I think that I've been able to develop is a system. One thing I always try to talk about here on the streams is create a system, live by it, don't jade away from it. That way you can always be on top of what is going to work for your investment, right? This is your capital, this is your life. So it's up to you, nobody else, to understand how to go about doing things. And so, it's just one of those things that it makes you feel good when you know you're on the right side of the fence and you're not the person getting caught off guard, and you are able to not predict, but understand where we are at within the cycle, understand where we are at within the short to medium term, as far as, hey, if I place this capital, what is the likelihood of me having some type of continuance of a downtrend from here, or the likelihood of me retaining this purchase price and probably gaining value over the next, like I said, midterm. We're talking about month or two. And so we'll dive into that and really take serious, man. I put this intro together with specific phrases. DCA over everything is part of that intro because it is so important. Lump sum investing, yes, that can be great, but for the average Joe, which I would consider most of us are, the average Joe, DCA, it really does defeat almost anything, because it helps you keep a sober mind. You spread your stuff out. You're not honing in on just one time period, and it allows you to capture the greater move, especially in the bear market. So let's address the chat. Thank y'all for coming through. Hey, this is something y'all gonna have to send this out, retweet this, send this out, send it to a family member, put it on your Instagram. But let's see if we can get some engagement here. Who we got in the chat today? We got Kamal making us the 1% of the 1%. And most people are not going to understand what that means. But yes, you're 100% right. And it's not so much me, it's you making yourself. And it's because you're putting in the time to learn. I would say 99% of when it comes to people just looking to say, hey, how does my financial future look? Or what am I doing today to give myself a little bit more security outside of just working? Most people don't want to learn. They don't want to put in the time to educate themselves. And so, they're going to end up with those results long term and short term. And so we're the 1% of the 1% in crypto who's not just saying, hey, I know how to buy crypto, but then again, hey, how do we really go about doing it in a savvy way? So yeah, I agree. 1% of the 1%. We got Hot Rollins. What's up, my man? Hope everything's doing well. You got Navin. Hey, first time in a long time, right? And let's continue to just give a good effort towards just creating value in information. That's what my main goal has always been, and I'll try to continue to do that. Who else we got? We got Karin in the chat. Hey, glad to have you. So the main topic of all right. So I think we're back. That was the dramatic pause that we needed. Now I think my mic, my audio is having a little snag, but I think we're back. So This is one of the biggest things that I would suggest in your thinking, right? So I'm not talking about, hey, what to do with money here. I'm just talking about a suggestion for thinking. When you're thinking about approaching a buy, have you done a couple things? Have you checked your emotion, right? When it's just like, oh man, do you feel yourself chasing? Or are you the lion that is in the back waiting for the opportunity, already knows what the opportunity looks like beforehand? And then when they see it, then they strike. It's kind of like that in the wild, but it's also like that within markets, right? If you feel that you only want to deploy capital after someone has told you, after you see the proof that it can go up a lot, after then yeah, you're going to be in chase mode of a green candle. And I mean, if you do that in the bear market, you'll still be okay, right? Long term. But like people are like, how do you get the 100x's? How do you get the more than that within crypto, which you can get if you spend a long enough time here? How do you get that? The generational wealth. And so that requires really being able to hone in on good assets at particular times when people are afraid of that wick going down. You're the person that's sober enough to say, hey, I understand this asset. We are not at a local top. This is a time to deploy capital. And that's it. That's the only difference between the average Joe and the 1%. And the 1% just has a strategy. That's it. And so today, let's kind of talking about a couple things. But one thing before we get into the DCA conversation, I wanted to talk about the altcoins, right? Everyone, I would say most people in crypto now are not Bitcoin maxis. So they've diversified outside of just Bitcoin, probably a little bit of Ethereum among some other alts. And so one thing to think about is like, well, we've seen Bitcoin have a pretty interesting year, up about what, 80 or 90% year to date. Now, why hasn't my altcoin had the same type of trajectory on its chart, but Bitcoin has, Ethereum has? And so this is something to take a look into. And so ratios are the best way to compare valuation of asset compared to another. So let's start with that. We'll get that on the big screen and we'll go through that and we'll keep on going. And like and subscribe, y'all. If y'all are feeling this so far, we're gonna put a lot of good stuff together. So we're gonna jump in to TradingView first. And I think this will be able to give us some decent context on, hey, when are alts going to take off? That's the question that I've gotten a little bit as time goes on. And so this is one of the best ways that I am able to extract some type of data and information to answer that question and be able to give a little context onto, hey, what type of patience is needed, what type of strategy is needed to go to the destination that you're trying to get to with your altcoin. So here, what we have. So if y'all don't know, total three, right? So total three is every single altcoin market cap except for Bitcoin and Ethereum. So it strips out Bitcoin, it strips out Ethereum, and it takes the market cap of all the altcoins and puts it all together. So this is your layer ones. This is your layer twos, your GameFi tokens. Everything falls under total three. And so one thing, as we all can kind of see here, which I can kind of point out, is we see that it ranges. So it's valuation versus BTC ranges, because what I have is the total three divided by BTC. And then so this is saying, hey, when does this outperform BTC? When does BTC outperform total three? When does total three outperform BTC? And when are they, just kind of just, going up at the same pace or going down at the same pace? And so currently, if we are to kind of extrapolate some dates, get an idea of what we're in the middle of, we can kind of see some trends. And then we can also kind of see, hey, what are we on the precipice of beforehand? And so let's see if we can pull out some data and pulling the chart of Bitcoin out as well. And so if we do that, we'll put that on log to help us see on the bigger scale. And then we can kind of put this here. Let's go ahead and put BTC up top. All right, so let's put that up there. And then we can look at the oscillator between Total 3 and BTC. And so this is really just giving us data back up. And so this is like mid bull market, 2017. You get the top in early 2018, and then you have bear market, right? You see bear market for BTC go up. You have the bull market for BTC, then bear, and then so we're currently starting the beginning of a bull. But what do we see? We see some divergence here. So let's make this make sense. So one thing to kind of take a look at is this point here, right? Where you see Total 3 just really outpacing BTC, right? And so you see this uptrend where, I mean, the market capitalization of the alts are, 3 times more rapid versus Bitcoin during this last portion of the bull market in 2017. And so that's something to note. And typically, what do we always see? Yeah, the alts are going to get crushed a little bit more than BTC in the bear, as we can see here. So BTC goes down, the alts, are going to start to lose some dominance versus BTC. Now, here's the interesting thing. Now, when you kind of see the moment where BTC says, okay, cool, we're going to get going. And so that new bull market starts in, mid or early to mid to what's that, March 2019? So early to mid 2019. And you start to see BTC go up. And so, but what do you see here? You see the alt still going down a little bit versus BTC, meaning that BTC is taking off, but the alts aren't. And then you see a steady gain of kind of saying, hey, some neutrality. And at this time, BTC is more so going down to sideways. And then so alts have a chance to kind of catch up a little bit, but they're not outpacing. And then you see, BTC really start to take off in price. It takes more of that dominance back. And then you see the alts really, really take place. And what we can do is we're going to put this on the monthly chart, because getting the months down is a good understanding of, okay, pace, especially on a monthly scale. And so, and what do you see at the last portion of this bull run, this top here? You have 1, 2, 3, 4, 5 months of where alts just rip. And this is what we are all wanting to experience, right? This is what we're all in it for. That time period of saying, hey, I was able to capture all or 80 to 90% of this gain of when altcoins are really outpacing. And you see altcoins doing their 30, 40, 50Xs, 100Xs during this time. So not much in here, right? Like alts aren't really doing a whole lot of outpacing during this time, but it's like the last 5 months, right? Same thing here. This is the last 6 to 7 months of the bull run. And so the general understanding of what people need to have is alts are not attaining those crazy returns until the last portion, the last stretch of the bull run. And so if we're not there, then, the alt is still in accumulation mode. But the lifeline of BTC starting to have a breath of fresh air is the beginning of saying, okay, we may have some turnaround. And then so the next thing to think about is, okay, say we do have something like this where we have some time where, alts are just going to continue just to, compared to BTC and the dominance, it's going to continue to just, hey, take a little bit of a back seat. But think about it. When do you want to buy? Because just think about it. Like when do you want to buy BTC? If you're a BTC buyer, when do you want to buy it? When it's in overvaluation or undervaluation versus the dollar, right? And so BTC USD chart, you'd want to just buy it when it's at a low dollar valuation, right? Cheaper BTC. Well, consider this ratio to be the same thing, right? Like the best opportunity to buy your alt is when it is in lower dominance versus BTC, because that means you have more upside potential at that point in time, if that makes sense, right? Because like, so for example, if you're buying your alts up in here when it's at a higher valuation versus BTC, that's actually at the higher risk level, right? Higher risk level to buy alts. And so with that being said, we are having some divergence of BTC going up, and then alts actually losing some dominance versus BTC. This is actually the opportunity zone more so when they're kind of treading alongside each other, and which not everybody understands that. So, but you just can't choose any alt though. That's the caveat. You just can't choose any alt off the street. Take things that have volume, take things that has some economic activity, take things that have some chart history and go from there. Use that to round out your portfolio. So Ethereum is probably a good thing to stack up. But other things like Pulse Chain, there's plenty of volume on PulseX. Hex has a lot of total value locked compared to a lot of other things. You can verify this stuff. It's very easy to verify on things like DeFi Llama here. So we're kind of going on to the next topic. So we look at Hex still, and this is only on Ethereum, mind you, not PHEX. Still $632 million locked up. And if you were to compare that to other protocols, let's see if we can get some data here. So overall within DeFi, we've got, 50 billion locked up. And that's over, Lido. Dealing with Ethereum, 15 billion. Aave, 6 billion. Curve, Uniswap. So Uniswap, 3.8 billion. Okay, cool. And you continue to just go through. But the interesting thing, all of these other things here, right? You've got DEXs, you've got liquid staking, right? Rocket Pool, Coinbase, Wrapped Ethereum. But Hex, right here, it's off on its own. One chain, one coin, right? Real trustless yield. And so it's still up here performing. Like a lot of people are like, oh, Hex is below a cent. But they're literally just not putting things together. They're literally just not doing the right calculations. So let me help you guys out. An easy way to see where the Hex price is in conjunction, everything, Hex on Pulse Chain and Hex on Ethereum, is come over to here. So come to Dex Screener and type in the following. Just giving you all some information to help you guys out. So if you ever want to look at Hex in its entirety, go to Hex Combinator, right? And so this is going to give you the full price. And let me see if we can put that on log. So this is going to give you the full price of everything in conjunction. So right now we're just under 3 cents. We were above 3 cents. And so this is something new that you're able to track here, which it puts Pulse Chain and Ethereum Hex into one nice easy chart. And then so you can see where you're at in total. So we are at just below 3 cents. And so if we come over to just the eHex side of it, 3 cents. So that would put us, let me just go ahead and put a line here so we all can kind of see where we truly at. We are in the accumulation phase of a of a beginning of a bull run, right? And so like we are here. We are here. We're not down there. So don't let these red, these red candles fool you. These wicks, these candles, it went here and it bounced back up. It's just value left from one chain to another. And so we are actually at a higher point than the low in January, which coincides with everything else in crypto. So what does that tell you? Everything is okay. And so another thing that we just have to realize is there's duration. Like if you guys have not had a chance to look at the stream I did, I think it was 2 or 3 streams ago, about understanding duration, understanding how long that these accumulation ranges are before the pop off, right? Because think about this. This is not that long of a time. This is a year. So if you go from February, so January 2020 to, October of 2021. So we're talking about a year and a half, right? That's not 4 years. So with that being said, things really, really, really don't get going until the last final year of a bull run, last year and a half of a bull run. And so the major gains, because the thing is, even if you take, let's say you did buy Hex from the beginning. Okay, cool. You got your 142x, but you still don't get your 1000x or 10,000x until, like, what do we say? The last 5 to 7 months. Stuff like that. But then again, nobody really took a chance back then. Most people got in here. As you can see, you see more distribution here. And then, so keeping things in normal perspective, right? You really only get that 60, 70, 80x, right? The last, what, 5 to 8 months of the bull. And then you have bear market. And then, so expect bear market 1 year, a year and a half of sideways chop, a year or some change of bull. And so we're in the transitional phase, y'all. And we're in a really good spot because we have these alts that are still in low valuation compared to the BTC market cap, which we know what these alts do in the bull. And so we're in a really good spot. So use DeFi Llama to your advantage, right? Go look up some stats on Pulse Chain compared to other chains, right? PulseX compared to other chains. And you'll be able to kind of see what things are looking like. So we got the DEX, right? Total value locked, 307 million. That's pretty good. Go check Aave. Go check other locations where money is sitting, where people holding and retaining their capital is what it's all about. And if there's economic activity, that means there's viability. If you don't see any economic activity, you need to really question on why you're holding that asset. So yeah, so let's take a quick break. I know that was a lot, or it was a little, depending on where you're at on your journey. That may have been very straightforward. I think that's pretty straightforward in being able to value something. And so let's kind of see what y'all got in the chat. Thoughts about that? I would say in general, just taking a chance to strip out the things that mean the most and digress away from paying attention to things that don't matter so much, aka Twitter. It's really a sobering thing. It really is. That's why I tend to take breaks in between my streams, because a lot of just filler nonsense stuff doesn't matter so much, truthfully. The one big development over the last 3 weeks, well, two. One, BlackRock. Larry Fink saying, hey, crypto is good. I'm making it very simple compared to what he said, but they're saying, hey, now we can admit to y'all that we've been accumulating. But yeah, them making progress on being able to hopefully get that spot ETF. Now, let me give y'all some timelines. The way that this works, there's 3 opportunities for the SEC to prolong it. So one time coming up, I believe it's going to be September, December, and then early next year. But the final date, write this date down, y'all. February 24th, 2024. That is the final date where the decision has to be made by then. So who knows? We may get it before, but something about the SEC tells me that they like to drag things out. So BlackRock, they are like 576 and 1. And that means approvals to non-approvals. They've only got 1 non-approval. So we'll see what is going to happen by February of 2024. So we got some time. But as you all know, time is fleeting. So we have time, but no time to waste. Karn, time is my friend. Does it look like we have another 6 months to stack alts? I would say, we're gonna have to pace ourselves with that. Like for me, I have a strict cutoff. I've been accumulating my alts since June of 2022 for certain ones. My bags are pretty packed, and I have a cutoff. For me, once Bitcoin starting to get, because we're gonna look at some on-chain data today as well. We're just touching base here, but there's certain areas of when Bitcoin kind of gets back on top of that 50% off of its regression from its previous top, and it holds that, then you start to see some economic activity in things outside of Ethereum and Bitcoin. And so that's my cutoff. I want to be in my alts before all the economic activity starts. And so that looks to be typically about, when we're going to look at it, we're going to see Bitcoin when it gets above 35 to 38K and it bounces off of there and it maintains that level. For me, I'm done investing in alts. And so we'll see how long that takes. That may be 2 months, that may be 6 months. We'll see. But not using a timeline, but using the data first, and then how does time react to the data? Side question: your thoughts on Phantom? Economic activity still there, plain and simple. Thoughts on when the cutoff would be for Pulse? Same thing. Low economic activity compared to when there is going to be economic activity. Look at some of the drivers. We have a movie coming out August 4th and 5th that may be a driver of new people that know nothing about Pulse and Hex coming to say, what is this thing? So there may be economic activity coming soon. But overall, right, because like I said, the main thing, if I could just get anyone to understand is mainly if you're just just don't be an investor into crypto the last 7, or I would say the last 5 to 8 months of the bull. And there's very easy ways to see where we're at inside the cycle. Very easy. If you can do that, you'll be all right. You know, and I think that's just the gist. But I like cutoffs because it helps me from chasing. Because yeah, you may have a portfolio where you've invested here in the bear, and you're still investing well in the bull. But there's something about that greed that wants to just keep you investing. It wants you to just keep on, keep on. It's gonna do another 20x and another 50x, and then I say, okay, what's the risk premium at that capital that I'm putting in? Of the capital I'm putting in at that point in time, what's the risk premium? And so if you don't have a cutoff, you can get sucked into that game. And I'm not playing it. And I'm hoping that y'all don't play it as well, right? Just do what you need to do. Be diligent down here, and then let everything just be smooth selling. And then you are in control of when you want to either take profits or other strategies outside of that. And so, that's kind of what I'll say. We'll look at Pulse here in a second. And so let's get into talking about DCA strategies here. I'm gonna use some on-chain data using Bitcoin as the barometer and Ethereum as the barometer, and then we'll look at some of the assets that we're interested in particular, mainly Pulse here, for example. And so let's jump in. So on-chain data is highly effective. I like it when people don't create these random skewed charts, but if they make a chart, specifically the Glassnode crew, when there's this data that doesn't have a bias, that's the stuff that I like, because it's just straight up good and bad. It's going to give us the information. And so one thing that I would suggest y'all do is come over here to Glassnode, but then we have the opportunity to look at things in a very sober way. So what we have here is we have the bull market correction down draws, because in every up move, there's always down draws. And so what do you want to do in the bull run? If you know that you're past the bear, you want to be able to take advantage of the down draws in that bull. And then you need to set a cutoff, in my personal opinion, psychologically. Psychologically, you need to say, hey, when does it make sense for me to say, hey, I'm content with what I put into the market? But that means you need to go heavy enough to be content. And if you aren't there, it means you don't have the conviction quite yet. So let's learn what conviction looks like. So conviction looks like seeing stuff like this. This is Bitcoin and seeing its bull runs. You can compare the trajectory of these charts to any assets, and you can very much so have some conviction to say that, hey, this is an asset that performs well through time. Each cycle, we've got 4 cycles to choose from: orange, red, blue, and green. We're in black currently. Orange, straight up. Red, straight up. Blue, the trajectory goes a little bit more of an angle. Green, coming more horizontal, but nonetheless straight up. And so just imagine your dollars, right? Imagine your dollars that you're putting in down here. Imagine your dollars putting in down here, here, and here, trading away your fiat for an asset, beating inflation. Imagine putting in your dollars here and allowing time allowing maturity, allowing people to realize, hey, this is something that I can put money in, allowing for the retail to come back, and then you have price appreciation. That's all investing is. Like all investing is this. These factors. Time, conviction, people. That's it. And where are you in that rotation? You know? And so now we've seen the down draws of how we can see how they can be pretty major. So what we have here are some horizontal lines of where you have down draws of, I believe the first one is 10%. You can get this other down draw of 20. You have 40, 50, and around 60% down draw. And so, we find ourselves like in different bulls getting to where we have continual 20% down draws like this one here in blue, right? That's the norm. And you have something like this where you have some big upside, but then you have some big down draw. And then you have some more big upside. And so one thing that I'm kind of seeing is that this cycle here in black is kind of reminiscing of this one here from 2015 to 2017, simply because we don't have like this big, huge uptrend overthrow that calls for a big downtrend underthrow. It's just nice, even killed movement so far. Now we'll see if things change here in the future. But nonetheless, so first thing, where are we at in the cycle? And more price data to come. And so let's kind of go back and look at some more on-chain data from here. So we've got the big picture. Now let's hone in on some more specifics. And so if we are looking at specifics, we're able to, use things like Bollinger Bands and also pricing models where we can look at Fibonacci retracements. Let me see if this will load for us. 1 second. All right. So we got the data. A lot of good stuff. It's going to take a little bit of time to get to greatness, and we got it. And hey, if you guys really value the stream, y'all see my internet slow here, tip the stream, right? There's an Ethereum address for donations. If you guys feel it within your heart, if you value any information, feel free to donate. I might be able to get some faster Wi-Fi. But with that being said, so we have Bollinger Bands. And so Bollinger Bands help us capture price movements on the upper bound and the lower bound. And you see here in dark blue, we have the average during a time duration. And so the cool part about this is we can really start to put together some things here. And so before we hit those, right, because I want to look at the Bollinger Bands, not so much on a weekly, because typically most people get paid on a 30-day rotation or bi-weekly. And then so what's going to be helpful is this one here, is Bitcoin 30-day price highs and price lows within its Bollinger Bands. And so, but instead of Bitcoin, I'm going to manipulate this chart with a little bit of calculations, and we'll trade that out for Ethereum. And so we'll get to that in a second. And because this all has to do with understanding undervaluation during the time period, overvaluation. You want to be an investor, a DCAer, ideally more tactically in the undervaluations within that monthly time frame. And so, but first, let's take a look about that cutoff. That like, hey, when does it make sense? Let's see, what am I looking for? All right, so we're looking at something that we've talked about quite often with Fibonacci retracements. And so here on Glassnode, we have a beautiful overlay of the retracements through time with the Bitcoin chart. And so this is something, really hype. Like I really like this stuff because it allows us to see a couple things. And so let me double track. Okay, so we're good. Just making sure the audio is on point. All right, let's jump back in. So now when we because we can look at the whole data set. Like I love the fact that Glassnode allows us not to just take one cycle or 2 cycles, but we can take all cycles, all data, and formulate a real sound understanding of what's going on here and how this stuff works. And so, what we can do, and if you guys don't know about Fibonacci, please, do your Googles, right? And so what I'm going to do is I'm going to take the last 3. And so we'll look at this one, bear up into the bull. So we'll take that. Okay. And so here, let me try to do that one more time. I think I want to get a little bit more data if possible. I want to get that whole top. All right, so let's get all of that. Yeah, and top to top. So we got the valley, and then we got the, man, that was exciting. Okay, so when you look at the down draws in a bear and you hit some type of neutrality, a basement, a floor, not a low necessarily, but hey, an average of all the sellers being exhausted, coins rotating from short-term holders to long-term holders, and then the compounding of new liquidity coming back into a market, proceeding up into a new bull. And so what we find ourselves is the certain levels. And so if you know about the Fibonacci retracements, you know about the market high, and then you know about this orange here, 23.6%, negative 38.2, the 50% retracement, which is the golden ratio, the 618, and then proceeding on to the 78.6 retracement. And then typically the 78%, the 78.6% retracement, not just within crypto, but in a lot of assets, is an area of deep value, like deep value. And so us all here this last cycle, I'm sure if you were paying attention to the stream, you already knew what was going on, what we were doing while Bitcoin was at 15, 18, 20K. And we're talking about since, November of last year. Oh, yeah, great opportunity. And so on the way back up, what do you see? You see some resistance here at 786. But then what do you see? You see a punch through past 618, and you see a snag. You see a snag at the golden ratio, which is right here. You go back above it, and then you hold it. And so let's kind of zoom in just for a second. So you break up past the golden ratio. You don't get past the 382 quite yet, but then you just hold that golden ratio for some time, right? You have the wick down. That's letting you know, like this wick was the first indicator, like, oh, snap, we're maintaining structure. But then when you ride it and then you see the deviation above it, this is letting you know, okay, things are getting going. New capital is coming. It's about to get exciting, right? And so use this information to help you out. It is because that took some time, right? This didn't happen overnight. Like the lows, right, were here in mid 2015. That process of maintaining golden ratio didn't happen until late 2016, right? And so, this duration is something to think about. And so let's kind of come back. So we'll take top to top. Boom. And we're talking about cutoffs here. So bear market, deep value under the 786 retracements, and then you make your way up. And now, so the interesting thing about this early impulse in mid 2019 was there was a big broader liquidity push even outside of crypto, even in TradFi, and so crypto is going to be a beneficiary of that. But anytime you have expedient acceleration, because y'all see how quick this was compared to the cycle previous, right? Too fast. And so it's like a wave. I always kind of explain it this way. Whenever you see a big wave coming in, it's going to draw that current out even more compared to the average. If it's a little wave, it's going to go in and it's going to lightly come out. And so this is a big wave here. So big overthrow, big underthrow, but the biggest thing is what's right. You go up and you really, you don't get quite past above that 382, just like last cycle. But you don't maintain the 50% retracement. So this line here in teal, and then you bounce your head off it, right? But then you get above it, and then boom, you maintain, and then party starts. And so I think the biggest thing to just keep in mind is if you are investing above the 50% retracement, you're not necessarily getting the best value per se. But if you find yourself investing after we have bounced off to the 50% retracement, you're putting yourself at high exposure risk. And so anything below it technically is good, right? In terms of alts, especially because like how we talked about, this last 5 to 6 months, last 8 months is when alts really outpaced Bitcoin during this time. So all of this stuff is accumulation and filler. And so let's kind of bring it back to where we are in today's time, in today's terms. So we'll take that top and we'll bring it up to all the data we have currently. And so what do we know? Deep value, right? So what do we talk about? Like if you go back to the first streams on this channel, I was like, hey, we have reached deep value. This is when you should be throwing, punching psychologically, right? Thinking about it. I'm not telling you what to do with your capital, your money, but thinking about punching and really trying to carve a dent in creating portfolio, right? And portfolio creation and rounding out is what we had the opportunity for a long time, all of, the back half of 2022, the beginning of 2023. And so what do we have? No, so we don't have that large overthrow where we're already touching the 382 like back in 2019. So I don't really like the comparison personally because not the same thing is happening. Like we're nowhere near in the valuation of just like that would have us already at 40K. And that was what in May of 2019. So we would have already been there, but we're not there. We're more so like I said, 2015, 2016, and not the exact as that either, right? Every cycle is new. And so with that being the case, now what are we looking at? And so we're looking at the fact that we have now gone back above the 618 and we've held it. Cool. But we have not gotten above, right, the 50% retracement. So for me, my ideal accumulation and my thoughts as how I handle and how I'm going to handle my portfolio is, hey, we're below the 50% retracement. Alts, okay, cool. I'm good. I'll go ahead and DCA into those. The moment that we start getting above the point, or this 50% retracement, typically we start to see some liveliness, right? And what does that mean? Also, 50% of the market, right, especially long-term holders, are now in real profit, not just a little bit. And then so typically they peel some of that profit off of Bitcoin and Ethereum, and then they test it out on some alts. And so that's kind of what we're looking at. So we're just chilling. We have the sideways chop. And so that's one way to understand, hey, how do I treat my alts? What are some cutoffs? And how do I keep myself away from high risk? Those are questions to think about. So that's a lot of good data, to kind of take in, digest. And now let's get into a little bit more specifics within the monthly time frame. So I don't really like talking about short term, but today we will talk about the short term DCA and how to really get the butter from the duck with your DCAs, right? Not buying the tops because you're chasing after the fact. So let's see if we can go back, and we're just kind of going back and forth, just kind of remembering what we just talked about, looking at these charts. I mean, look at the hockey sticks, right? I think the biggest thing is if you just get in before the hockey stick, you know what, you'll be pretty happy. But we want more. We want generational wealth, right? And so we have to be tactful, be willing to do the stuff that most people aren't, which is invest when people don't understand it, when they're not willing. And, that's just what it takes. Not telling you what to do, but what to think about potentially, right? So let's go ahead and look at this here. So we'll look at Bitcoin first because we know Bitcoin is the big dog. What Bitcoin does, everyone else will follow at some points. And if Bitcoin is not doing well, then also definitely won't do well. So let's use Bitcoin as an idea. And we're really just going to look at the past uptrend, right? Because we are no longer in extended downtrend. We are in transitional to uptrend. So let's take a look at previous cycle, and we'll go from there. So let's go here and look at the transitional period back in 2019, 2020. And so if you can kind of remember on that Fibonacci chart, this is when it's kind of going back up those fib levels, right? And as you can see, it's hitting that upper bound of the 30-day price high and low with this Bollinger Band just continuously, right? And so you're probably, if you're an investor here, you're like, man, this is a great opportunity. Or I guess you could say this is a great outcome from me investing during that basin prior. And so you're probably thinking about like, okay, like, this is pretty expansive. Should I invest? Should I DCA, or should I just let it ride? And this is just, this is very reminiscent of how do you say it? Let me think about this. This move here is like the end of a bull run. Typically, it was just very early and premature, where it's just like new high every couple weeks. And so that's very uncharacteristic of the beginning of a cycle. And so this being the case, you had this downtrend that was extended, in the beginning of the bull. So one thing to think about is using information like this, and you're going to be able to recreate this. If you don't have Glassnode, I'll show you a way to recreate this on TradingView to help you out. And so one thing is overvaluation in blue, undervaluation in red. So simply, let's say you just got paid. You'll come over to a chart on Glassnode like this, or to one on TradingView that you've created to say, hey, am I closer to blue or am I closer to red? It's really that simple, right? But typically you really, really want to hone in, right? Even, in this accumulation range, all of this accumulation range, like, how do you know what are the better DCAs? Like, are you a person that wants to DCA up here because what I'm looking at here is price in black, and I'm going to circle. Do you want to be a DCA here or here? No, you don't. Do you want to be a DCA here? Nope. Or do you want to be on the bottom swings, right, of the fair value during this duration? So like here, right, the touch on red, here, the touch on red, here, here, areas like here and here. And so are those the exact lows? No, the exact low was here during COVID. But what does it do if you're a DCA? It helps you stick to the bottom basin of price during the duration of that time, which generally protects you from downside action of 30, 40, 60%, especially for Bitcoin and especially for alts. And so learning to say, okay, this is touching or very close to red. Hey, I'm going to retain my capital. If you're looking at this chart and you see, okay, you find that Bitcoin typically is on the upper bound, you probably want to chill out. Let's say you got paid, you just got your bonus. All right, cool. Hold on to that. Save that capital for a more advantageous time, right? Because even in a bullish move, right, there's moments, okay, all of this is bullish from COVID up and on, right? There's still time where we have that sideways chop, and then we kind of hit the lower basin. And then so this is more sound. If you want a friendly experience, right? If you're a person that's looking at your portfolio, and if you don't like any like movement to the downside, right? You don't like seeing that number go negative or go red, then the times of when you allocate that capital do matter. And so the more tactful way to do that is doing it on the lower valuation of the Bollinger Bands. So one even better is, let's say you're not accumulating Bitcoin. Let's say you're accumulating Ethereum. So if you are a Glassnode member, and if you at least have the advanced, which I think is what, like $30 a month, something like that, then you can make some adjustments to some of these charts, which this is what we'll do here. And so instead of Bitcoin being what we're evaluating, I'm going to change this out with a little bit of sauce here. So let's go ahead and do that really quick. And so we have to change a few things, replace this metric, and we'll put Ethereum here, T1 price, replace. And so we got to do a couple things because it's going to give us some data that is not thorough. Like, we can't make any real adjustments or thought processes off of that. So we need to change this here, change this here, y-axis 1, and we should be good. Okay, so now we can do the exact same thing, but something that we actually do want to accumulate, or I want to accumulate, right? Ethereum. So same thing here. Let's take the price action for, let's take this point on. And so a couple things that we can see, which I want to go ahead and turn that off, is the bottom basin. I want to DCA at the bottom basin or close to it. And so, yeah, we have the watershed moment. Luna, all this crap going on. Alex Masinch, Associates, like all these guys. With Alex finally going to jail. I think that was a development recently. Cool. Not too big of a deal, but like all of this, like this downtrend down here in the bear. And so boom, we hit bottom basin. This is Ethereum at $1,000. My best, I mean, to date, and I've got it on file, on record. I'm gonna tell my kids about, man, I remember when I was in my crypto days, right? And we'll see if crypto is still kicking and pushing, 40, 50 years from now. But what I'm gonna tell them was, man, I had the generational buy opportunity that I took advantage because I got Ethereum at 100. I mean, I'm sorry, talking about this cycle, not last cycle. Last cycle, I was able to get me some nice, juicy $190 Ethereum. But this cycle, I got myself $895 Ethereum right here in mid-June. And so we'll see how that fares in time. I would venture to say over the next 5 to 10 to 20 years, it's going to be a great experience. And so if you were able to capture that, good on you. If you're able to capture $1,000 or $1,200 or even $1,600 Ethereum through time, you'll probably see some good results. But let's just talk about in the short term here. And then so we've had opportunities of where we're staying away from these tops, right? So staying away from that first impulse of where they were introducing the upgrade. What is this? No, this isn't EIP 1559. This is, if I'm not mistaken, the fact that they're going to start to try to make Ethereum deflationary. So before the news, you see the ramp up. And then so do you want to be somebody that's chasing it? No, not here. You don't want to be a chaser here, any of that up on the upper bound. You don't want to be chasing any of that. But what you do want to consider is possibly DCAing on these lower bounds. So here, definitely here, a little bit of here, touch on red here, touch. And then so the question is, where are we at today? We're at upper bounds, y'all. And so the last week, Ethereum's trying to press the issue. Not a time to DCA, according to this chart, according to the data, not my opinion. And we just want to wait for this thing to go ahead and hit this touch at the bottom part. And so that may be in a week, maybe 2 weeks. But the thing is, you're able to, track these things through time. And so another thing is, okay, well, how do we do some of this in essence on TradingView? So let's go back over to TradingView. Let's put Ethereum up on the chart. Okay. So this is the duration map. If you have not seen this, please, if you want more information on that, go back to the stream. About, I think it was 3 or 4 streams ago, we did like a full hour dissertation on understanding duration during the bull phase, the bear phase, the transitional phase. But we'll skip past that for today, and we'll look at we'll just look at something a little bit more simple. That way we can get a little bit more understanding here. So let's see. Let's do this one here. Boom. All right. So we'll take Bitcoin off. So how can we replicate if you don't have Glassnode, which I would highly suggest you guys take a look. I mean, look, I don't get nothing from them. They're big wigs. I just do it the shout out because I just know the value that's there. That, I mean, you're not going to get it on Twitter because it's not an opinion. It's just data. And so how can we recreate something similar here? So we'll go to the daily, right? Daily chart, which, okay, we can get some data. We'll pull up the RSI, no MACD for now. And then we'll go over to a thing called the Bollinger Bands, but we'll do a little bit of adjusting to these Bollinger Bands because it's very similar. Like volatility is pretty low. As you can see, as we're very tight, we're tight here. Typically on times where, the Bollinger Bands are pretty tight, you see some type of volatility, but we'll do some adjusting here. So on these Bollinger Bands, what do we need to do? We need to change this to 30, right? And then standard deviations. And this is something that you can play with. We have it at 2. You can put it at 4 standard deviations. And that gives you a little bit more understanding on the deep value, right? What I find is a lot of the time, the standard deviations that, look pretty good to make some real, I guess you can say some real assessments is the 3 standard deviations, plus or minus, right? So for example, what does that look like? It looks like here. So let's go ahead and, let's see if we can find some arrows to put on here. That way we can be a little bit more thorough. So, let's go. So this is just, hey, thoughts about DCA. So what do you know, right? And then so we're going to add something to this, right? That I'm going to help you guys. Last little bit of sauce, right? Change the traditional candles to Heikin-Ashi candles. That lets you see momentum. So the prerequisites of kind of what you want to think about is pushing down on the lower bound, and then that moment of where after you see a lot, like I guess you can say an overwhelming amount, not just 1 or 2 days, but like 5, 7, 8 days of considerable, like, red Heikin-Ashis. So consecutive red Heikin-Ashis, that first green one, in conjunction to being on the lower portion, especially on the lower half, right? So you really can even just use this midline, right, as just the base case. If you're above it, don't even think about it, right? If you're below it, okay, cool. Think about it. But then to be a little bit more tactful, right, really looking at that first green, right, that first green Heikin-Ashi after a consecutive amount of red candles. And you're on the lower end touching this Bollinger Band. So what does that look like? So like there, let's see if we can put some more data. This is something that y'all can do. Anybody can do this, right? Here. And are you getting the exact bottom? No, you're getting a good value. Who cares about getting exact bottoms? Everyone needs to let go of that because it's not something that is realistic for an active investor, right? So what does that look like there, right? That looks like not here, but that one right there. Boom. This one might have been a little bit harder to capture because we didn't necessarily get all the way down, but same thing. Being able to recognize time blocks. If y'all see how, let me show y'all this. Y'all see how these Bollinger Bands get real skinny like that? That's also another thing. And so this is just time to learn, right? Use this information. When you see Bollinger Bands get real skinny like this, okay, cool. Real skinny on the bottom side. Hey, you might want to take your shot. Potentially. So like there. And these are all staying away from local tops, right? So you have a good experience as an investor, as an active investor, and boom, touching the bottom part. And you got that first green Heikin-Ashi, boom, like there. And then so what does that look like? If we were to put some price calls, that means you're capturing prices like $1,000 Ethereum there. You got a price like $1,300 Ethereum there. You also got this $1,100 Ethereum there. Boom. $1,400 Ethereum and $1,600 Ethereum. And that's all while BTC is below its 50% retracement. This is what it looks like, right? And then so with that being said, another way to double check your work, right, is use the RSI, right? Are we touching on the RSI? Then for sure, you know that you're making a sound decision, right? And so what y'all can do, a little more sauce, is go ahead and put a alert. So we're going to put an alert. Y'all see that right corner right here? You see that little plus sign? We're going to put an alert here on the daily chart as well. Anytime we get a touch on this daily RSI, Ethereum, hint, may want to think about this may be a better time DCA, not when we're at the top, right? So add that alert, boom. So now it's gonna send me a message, an email every single time that this happens. And as long as we are below that 50% retracement level for Bitcoin, that's a sound DCA for this particular asset for me. It may be different for you, but this is how I value things. This is how you can make a sound decision, in my opinion, for my portfolio. You know, you may have something else, but if you don't have something, maybe think about creating a strategy like how I've created a strategy. It's helpful. It has always kept me away from chasing my emotion of trying to only just want to, oh, snap. Yeah, this is going to go to the moon now. Let me add more here. Nope, pump fake. Gotcha. Pump fake there. And it helps keep me sober, right? And so this is what I need, right? And so, you know, what does that look like? Because we can do the same thing here for the 50% retracement for Ethereum. Boom, I already got it. It's on lock right here. So I just have it in a different color. So right here in green. And so, you know, traditionally, you know, if you're an investor below this point in long duration time, you'll do okay. Your capital is not going to face too much severe bear market type action in the asset class that you're in. But from there, if you find yourself still investing, just know that, you know, risk premium becomes higher. So, you know, this is something to think about. But for me, really, because think about it, we are bouncing off 382, stopped at the golden ratio, then we done. And so for me, I like to just have a little bit of extra cushion, truthfully. And so what does that look like for me? I'm probably saying, hey, my DCA ends, you know, somewhere in this area, more so on the lower part. But through this next year, 12 months, I'd say for me, I'm thinking about stopping my DCA on Ethereum, you know, when we get, you know, towards this box. And so this is in between the 382 and the 50% retracement. So that's, you know, if we put a price call there, once Ethereum is around 2,500 and 3,000, I'm donezo, you know. And that's, you know, more so also where Bitcoin is getting towards that 35K, 35 to 40K, you know. And so just something to think about. But that is tactful DCA, right? This is the topic of conversation. So let's bring that over to an alt potentially that we may or may not have interest in. Pulse. We can do the exact same thing for Pulse. Heikin-Ashi, daily chart, right? We can pull up the RSI. So we'll pull that up here. But we can do the exact same things. So let's go to the bands. Let's get the bonds, Bollinger Bands. We will go with the standard deviations that we're looking for. So the length, monthly, 30-day, free standard deviation. And then so with this only being an asset that is, oh man, look at that tightness right there. That was a great op, right? Here, let's remove this for now. SAC price, we're just above SAC price, you know. We'll get rid of that. But that's just the reminder, right? This, if you were able to get into that ecosystem early on day one, or no, I think this is like day 2, get across that bridge, golden opportunity. You were able to get 32 million pulse in between 1,200 and 2,400 bucks. I think you can still get that amount. What I think it's like 3,500, still decent. That gets you one validator. As of right now, the validator is giving you 20% yield on an asset that may go up through time, right? Where are you going to find that? I don't know. You might have to look. So we'll get rid of this for now. And we'll just kind of, you know, use the same barometers, right? Where now, mind you, that this is an asset that is not as old. And then so we may have to drop it down just a little bit. So 8-hour chart may be a little bit more helpful. But one thing though, as this mature, you want to start using longer duration charts. Using the 1 hour is not something that you want to get used to doing. But so as we're looking at it now, okay, pulse. Are we below or above the midline here? We're above. So in my eyes, hey, chill out. You know, the moment we go below it, okay, cool. Let's see what can we do. And are we touching or getting close to the bottom of the Bollinger? Let's throw up the RSI for another double check, another confirmation. So tap on the lower portion of the RSI. Okay, that looks good to me. So what I'm gonna do here, let's go ahead and place a couple vertical bars. Help give us some context here of putting all this stuff together. All right. So touch on the lower part of the RSI here. Let's change that to let's go green for buy. And then we'll change that to a dotted line. Okay, cool. Let's do another one here. Right. Boom. And same thing. That first Haikanashi. And like I'm saying, the longer that this coin is going to mature, we want to start getting into a daily chart and then to a 3-day chart, especially when we're using the Haikanashis, right? But same thing, first green Haikanashi, we're below this midline. The Bollinger Band has the correct deviations. Our size touching the bottom. Hey, solid DCA versus chasing this top, chasing that top when we're above the midline. And so the big capitulation, as what we can see, trajectory has changed, right? The short-term holders, the people that just didn't get it, majority of them are gone. There may still be a few left, but the big portion of those people, thank goodness, they're gone. So now let the games begin, because it's clear to see, right? You see the trajectory has changed from something like that. Here, let me see if I can get something that makes us have a little bit more of a visual. We see that trajectory has changed from that angle to now with that white line is showing this angle. That's clear to see. So 2 different trajectories. And then so now in this transitional trajectory, let's just scrape the bottom of the pan, aka the better DCA range. And so, I mean, because everything is oscillating, there's never just going to be something that just goes one direction only. Even in an uptrend, you're going to have the down draws, like how we talked about for Bitcoin. Same thing with Pulse. And so, we're just going to use this to our advantage. So as of right now, I'm being cautious, optimistically cautious, especially for these top portions. But I'm looking at, okay, hey, when are we going to go ahead and potentially drop down below this midline? Okay, cool. We're going to see this Bollinger Band at the lower portion start to creep up. And then so for me, I'm really trying to look at price action, on this lower portion. And then so I have this trend line here because as of now, as of late, it's holding. Touch here, here, and here. And then so who knows? We may break through or we may not. We don't know. And we may kind of, come to this lower portion. But same thing, we're not trying to get it perfect. Anything even below this midline is solid DCA compared to, chasing the top. You get more bang for your buck, more pulse for your buck, more wealth for your buck later on. That's what I like to think of it as through time. And so this is just versus, it's USD valuation. You can do a lot of this stuff. If you want to look at Pulse X versus Pulse, should I be buying Pulse versus Pulse X? You can do a lot of different things with this method that I'm kind of giving some alpha, some information on. And it's up to you to use it to your benefit if you so choose to. But it's not telling you what to do with your money. It's just showing a different way of valuing different things through time. And so for me, yeah, I'm gonna just chill out. Probably the same thing for Pulse X as well. But in the pending days, right? Pending week, we may see an opportunity. But for me, yeah, I've been doing what I've been needing to do here for Pulse X. Another thing to think about is you take this local low here before we went up and one, and do your own fib retracement, right? Okay. Of this move here, some things probably are going to get digested. And we are kind of coming to this 382. We'll see if it stands. If it stands and we start to see consecutive green candles, okay, then that was a DCA opportunity. But typically in the bullish phase, if you have this expansive move, you'll tend to have a little bit more regression. So it's really this portion here may be the op here in the pending days. So let's draw that op right there. And so we'll monitor and see. So we got that circle. Let's kind of put a little bit more context with a square rectangle. So on pending days, let's see what that looks like. And so that's the topic. Hope that was helpful. The DCAing of your capital is important. It's not one of those things that's just like, oh, let me just throw flies, or let me just throw, poop at the wall and the flies are going to get attracted. Like, you can do that. You're going to have some issues with, your emotions if you do that. And so what we're doing here is we're taking a systematical approach towards asset allocation. So no moon math here. No, hey, this is going to 50x. It's just looking at where we at, how to DCA, and you go from there. You choose your assets and you go. So another thing that I'll leave y'all with is this. So this is big picture. I always like to finish and talk about big picture. So before we take off, big picture. So what we have here, it's a couple of things. We've got vertical lines. We've got, a couple of things. Here in yellow is the Bitcoin price. Now in white, we have this thing that looks like it's oscillating up and down, right? This is what we call something cyclical. If you see that it's in a range, but it's just going up and down, up and down, up and down, that is what you call an oscillator. RSI is an oscillator. MACD is an oscillator. What we have here, because now we're going to talk about liquidity on a larger scale. What people do, what countries do, what wealth managers do, what insurance companies do. People that have to disperse capital, they are always looking to say, hey, where is my money treated best? There's times when they want to take risks. There's times when they don't. So here in the right-hand corner, we have the China 10-year divided by DXY, because the 10-year yield is something that you can get in China. People, investors all around the world invest their money in that yield. And there's times when they would rather have it in US dollar because that's maintaining value better versus other currencies. So the oscillator between the two and the high yield on the 2-month for the US. So we put this stuff together and we are able to see an oscillator that helps us understand liquidity movement. And one thing that you'll find is when we see capital coming over to the 10-year yield in China versus the dollar, let's make it plain. You see, this is when Bitcoin starts to hit its tops, right? And then when we go back to the dollar dominance, Bitcoin have its bear market. So you see here, 3 really, really good, solid, long-term valuations. And we're using something outside of crypto to understand the liquidity movement. That's key. If you only look at crypto, you only get limited results. And so what we're finding is, okay, those tops are in place. And that matches with RSI for the oscillator and MACD. But one thing that we have is these vertical bars, right? These vertical green bars. They're significant, right? Because if we look at the MACD, what do we find? This is the beginning, right? Going from undervaluation, underthrow, aka DCA range, to the beginning of the China 10-year being more dominant, more liquidity being pulled to that versus the dollar. And then you have the beginning of that bull run for crypto. Bear run, bull run, bear run, bull run, bear run, beginning of bull run. And then so that's at the beginning of, consecutive months, right? Because I have this on a 21 day. We can put this on the monthly, same thing, right? On the monthly, consecutive green candles through time. And you start off small. And then so this is another way to value what we're looking at. And so typically, what does Bitcoin do? It's at the beginning of something pretty exciting, right? This green line at the beginning of something pretty exciting, at the beginning of something pretty exciting here. And here we've, just crossed through it, right? Here in April, just the beginning of something pretty exciting in pending years to come. And so we can verify with global liquidity, global net liquidity. And so same thing, we're just going to go ahead and drag that up onto the chart. Boom. And we can get rid of RSI for now. And MACD. So global net liquidity has hit this low point. BTC hit its low point. And global net liquidity had an impulse, a little retraction down. And that's why, things aren't just going crazy and flying. But if you know where to look, they are. It just hasn't hit the most risky asset class yet, which is crypto, right? But we have some inbound upwards moving of the global net liquidity, which, as you can see, the trend through time, right? We'll take off Bitcoin for now, right? The trend through time is up, more money creation. Don't worry about these small deviations. The trend is up through 10, 20, 30 years. And so the interesting thing is, okay, well, what are the institutions doing? I was talking with a good buddy of mine, Miguel, about this the other day. I was like, hey, Miguel, have you been looking at some things within the stock market outside of crypto, in particular, mining? So Bitcoin mining stocks that have to do with crypto, but are not crypto itself. He's like, yeah, I've been peeping it. I was like, okay, cool. Because I've been really trying to understand and think about liquidity movement for institutions, right? Because sometimes they don't want to buy the direct asset, aka Bitcoin and Ethereum. They would rather buy something that's legal, something that they are okay with telling their constituents, oh yeah, we have this on our balance sheet, right? And so what does that look like? That looks like companies like MicroStrategy potentially, or Coinbase, or mining stocks. So let's dive into that really quick before we end. And I'm gonna leave y'all with this tidbit because it's pretty astonishing. And so let's jump over to Coinbase stock. So we'll put that on the regular candles here to get the data information. And then so remember, BlackRock, they are the ones that have said, hey, we're doing this ETF and crypto good now. We like. And so the interesting thing is, since the beginning of the year, since liquidity came back, and also BlackRock giving the cosign, let's go ahead and put this on the daily chart. Coinbase stock has outperformed even Bitcoin. So Bitcoin to date is up what? Year to date, maybe like 80, 90%. This is outperforming at 2-1. And so what is one thing that you've noticed? It's punched through the sideways chop. So institutions are allocating here before the asset, the actual asset, right? This is just a representative of crypto, not crypto itself. But as you can see, it's punched through, right? Punched through its yearly highs, and it's going crazy. And so, this led me to think about, well, what about that Sailor guy? What about his company? MicroStrategy. What are they doing? Interesting. Similar type things. MicroStrategy, if you look at the chart, it looks very, very similar to Bitcoin, doesn't it? High, double top, bear market, recovery, lows again, off the lows, punch through. And so, is this potentially leading the actual asset? Can this give us more information of where BTC may be heading, where Ethereum may be heading? Right? Because if this punch through, why wouldn't that actual asset punch through? Well, they would rather do what's easy, because here's the thing. What we have to realize, being in crypto, what's the easy thing to do? It's not so easy to go and create a MetaMask, go in, transfer coins from Coinbase or Kraken or whatever fiat on-ramp that you're using over to your MetaMask, or even go to Uniswap, have to wait for that transaction, or even learn all that. It's easier to say, oh, let me just go to the CME. Let me go to something I've been using for years and just buy it through this company that represents crypto, right? It's much easier. And think about the average person. The average person doesn't want to have to do this either. And that's why retail is always last at the end of the cycle. But for these guys, it's much easier to just do this here. So another thing to think about, what about GBTC, right? Grayscale. Same thing, off the lows. And from what it looks like, that discount is shriveling up. That discount ain't what it was. It's not 50%. It's trickling higher, which means people want the asset, which is a good thing. And the even better thing is if it goes into a premium, because it was in a premium all through this top here, and Bitcoin was going because people needed and wanted the asset. And so 155%, but Bitcoin is only going up 80, 90%. And so what do you see? Punch through. But that's not even the crazy part. Crypto mining stocks. You think Bitcoin has performed well? Sure. You think MicroStrategy and Coinbase and GBTC have performed well? Sure. What about these guys? So I'm going to introduce you guys to 3 crypto mining stocks, right? And this isn't necessarily for us to say, oh, we're going to go buy this stuff. This is for us always to say, okay, what are the drivers? Where's the money going? That's the key thing to think about. So let me introduce you guys to Marathon. So we have Marathon, we have HUD-8, and then we have Riot. So let's start with Marathon. Marathon, very similar chart to what? BTC, right? Top, bear market. Low here at the beginning of the year, liquidity comes back. But what do you notice, right? This thing continues to just press. It's like it's pressing the issue, right? It is pressing the issue. Lower low, punch through, right? The sideways chop that it was getting, like whether you want to call it here or here, because this is where Bitcoin is at. Bitcoin is struggling with this sideways chop, but then punch through, right? But look at the performance. We're not talking 80%. We're not talking 150%. We're talking, to the top of this thing, talking 500%, right? So what is it about these? What do they see here versus just buying Bitcoin spot? And this leads to the thinking of, what will they do if Bitcoin ETF comes? The ETF is easier for them to allocate towards. And the spot ETF is actual Bitcoin. This is what we need to be thinking about. February 24, 2024. That's the date of when the SEC has to answer BlackRock. Keep that in mind. So look at HUD-8. Similar price. This is like NASDAQ type performance, because the NASDAQ is doing stuff like this, even where you have the sideways and this is going against what all liquidity is saying. And then so there's an overvaluation of people really, really wanting this asset, right? 400% here, Riot. Same thing, right? Punch through, making new highs. So does this beg to say that Bitcoin may follow suit? Ethereum may follow suit? We'll have to find out. But just something to look at, something to think about. XLK, tech sector. Well, would you look at that? The tech sector has made new highs. This is interesting, guys, because everyone said, hey, we are in bear market. We are in this whole time. We're in a bear market. No, this ain't it. No, we're going to a recession. No, it's just talk. What's actually happening? New highs for the tech sector. Something to think about. NVIDIA leading the tech sector. It's been made new highs. It's gapped up. Train has not slowed down. I actually still have NVIDIA from 2000 and I don't know, when did I buy NVIDIA? 2018? So this is something, crypto is not the only game in town, but it is tech, right? And then so why do we need to pay attention to the tech sector? Because crypto is the most advanced tech that we have. AI is up there, but on financial terms, crypto is the hottest game in town. 10x, not bad for a stock. I'll leave y'all with that. A lot of info, a lot of conversation, a lot of thoughts to be had. Never telling y'all what to do with your money. No, never telling y'all how to be an investor. All I do is say, hey, what to think about, what to consider. I know what I'm doing. Maybe it's something that you'd say, hey, I'd take a piece of that. Never copy everything someone is doing, but there may be some value where you can say, hey, I might be able to take a little bit of that and add it to my toolkit of a framework that I'm creating on my own. That's what each person should be doing. So that is the advice I will give. So, yeah. Appreciate y'all for coming through. Who else we got? Just touched on it a little bit. Who else we got? How about strategies on DCA out of a position? Oh, well, you know what? That's a good topic. We may have to hit that in another stream. But there is something that can help with that as well. So we'll maybe touch that in the next stream. What I will say is that's something. I mean, it depends on what kind of investor. If you're a trader, I really can't help you, to be honest. If you are trying to go for the larger move through time, that's not something that we need to think about yet. We're still in transition phase. And so that will come into play probably 2024, 2025. We'll see. But yeah. Hey, my guy JE, what's up? Phantom, I haven't talked about it, but I talked about the concept of if it is an asset that you like, how to see the times when it's undervaluated and the thought process of thinking about your DCA during that time versus chasing. So you may be able to apply that to Phantom. My guy, what's up? Appreciate you. And I'm just trying to give value. That's it. Same thing. If y'all appreciate this, there is a donation address, but even better, like the stream, send it to a family member, send it to a friend. They may be able to extract some type of value from it as well. What else we got? Am I going to Vegas? Unfortunately not. Work's the calling. I own a couple businesses that require me to be present. So unfortunately, I won't be able to make it that weekend. But yeah, 2024, 2025, when gains are plentiful, I may be able to take an extra vacation or two. But until then, I'm getting my butt to work. At the end of the day, that's what's going to get the bills paid. That's what's going to keep me buying more of the asset while it's, I'm so tunnel vision with this right now. Like, I just need more fiat to put into the investment that I know I'm not sparing a weekend. Literally, I'm not sparing any weekends until we hit the last 5 months of the bull, truthfully. So y'all go have fun. I'll be there in spirit. I have to write down better notes and remember to use those candles with Bollinger Bands. It better than go off feeling like when I get paid. Okay. I mean, it's just one of those things that, whatever system is going to work for you, you follow whatever's easiest that you can attain and understand. I'm just presenting options to think about. Terrell Davis, salute. For real, man. Hey, sometimes you got to do what you got to do. Dave T, nice to see you. Thanks for coming through. I'm sure you're catching up. Do y'all have any questions before we take off? We've been on for an hour and a half. A lot of things to think about, a few developments, but we're in a good spot, especially with new assets that we know have use case, aka Pulse Chain, Pulse Hex, Hex, P Hex. Stick to the stuff that you know that works. If you don't know what to do, Ethereum, we know it works. Well, if nobody has any questions, I think that's it. I appreciate y'all for coming through. We'll have another stream coming. It may be in a week, it may be 3. We'll see, depending on how things develop. But really, what I would just say, same thing like I said earlier, get out there and get to work, man. Truthfully, that's the biggest alpha. Get to work. Do it for your family. Do it for others outside of yourself. Do it so one day you might be able to say, you know what? I have an extra couple $1,000. Let me go bless somebody. Let me go give them. Because at that point in time, if you do what you need to do down here, extra $1,000, you can be like, look, I can actually help somebody else out. And at the end of the day, that's something to think about, because why do all this work if you're not going to share with others? So yeah, that's all I got. Hope y'all enjoyed the stream. We'll catch you in the weeks to come. Peace.